that no one really knows how bad this is.
Tailors are warning of empty shelves, consumer sentiment plummeting to one of the lowest levels on record.
Minimal quality of life is out of reach for the bottom 60% of American households.
The U.S. just crossed a sobering milestone.
And cue the fire. Breaking news. Run to Costco. Grab some toilet paper. But, I mean, first, breaking news. You know when it comes across like that, you know it's legit. 57% critical threshold. Grab yourself a $1.50 hot dog. Those are delicious. Although, the pizza, okay. Minus the heartburn, pizza beats hot dog. But if I had to choose between hot dog and taco, I'm going to go taco. Here it is now, and this isn't even like the fertilizer issue. This is actually, if you guys are living over there, but if you're not living over there, you're okay. Hey, Florida, buckle down. Also, when you're at Costco picking up the toilet paper, remember, grab one of these, stay away from that. That's going to put some weight around the waist. You know, your GLPs that you just spent all that money on, that's a no-no. Also, if you're not currently in Florida, okay, now the rest of the video is for you. And I have a question. Actually, I have a challenge. I want you to prove me wrong. I believe that life is going to get harder for you. That is unless you are doing the two solutions. Start a side hustle, trade equities. Other than that, here we go. Prove me wrong. Let's start off by paychecks. Paychecks are falling behind prices again. So when you guys have your job, okay, this is you having your job, it's okay. Everything's okay. Where we is now? Ooh, yikes. Now, I'm not going to blame this on Trump, but okay. I don't care who is in there. This trend is your friend. You're not surviving. America is drowning in debt. Set that over there. Plus, when governments drowned you in debt, your taxes are going to go up. Do you see? You have to pay $360,000. What else are you doing? You're putting everything on the credit card. $1.4 trillion on the credit card. Not just that. Jamie Dimon just came out and he said, this is not sustainable. And this whole stock market thing, you guys have almost maxed out all of your credit limits. And it's going to go down. And if you read tea leaves, the month we're in, August, September, typically no good. You can maybe start coming back in October. So now let's set the debt aside. Us as Americans, we are separating ourselves. This is unhealthy behavior. You're separating yourselves from everyone else, not just your neighbor who you probably don't even know their name. Just checking. You're also separating yourself from the world, pushing away from allies, from talent. Then companies are doing everything they can to invest in AI and do away with you. Also, dodged a bullet on that one. It's been shorting this guy. But for safety precautions, he has a buy order. Another way of looking at it, he bought calls, which confuses people. He purchased calls, NVIDIA for a hedge, but we won't go into that. The point is, we're spending so much money on AI, and we're trying to eliminate ourselves. Thus, also by doing that, you have this thing right here. It's kind of resembles 2000. It's actually a lot worse. And this is consumer sentiment, you know, where it was like, oh, it's not, that's 08, right? Not so good. And the market reacted to that. I don't know what kind of drug it's currently on. We are on the spend all we have. Companies are putting everything on the credit card. AI, I don't care. This is it. Everything that they got. Not good. And here's you guys. Now remember, that was 08. Where we is now? Oh, wow. We're all the way down here. Actually, when they locked you guys down, you were here. You are below that. And the trend is your friend. Okay. So now we will set paychecks aside. We'll set debt aside. We'll set the trend of you guys being able to survive, sentiment, aside. There has to be some good news out there, Bravo. Well, U.S. consumer spending on Apple App Store fell for the first time ever in history. Look at this. Woohoo! Look, see, this is the consumer. This is the consumer. Again, not good news. Actually, the good news for the banks, loan growth. You guys are still putting things on the credit card. You are still going for loans. See, this is what creating money is loans. Loans are created. Money is created. You live in a debt-based system. This is happening with businesses. Loans, this is what's happening. You're seeing this. And then for the regular consumer, you have inflation. You're like, more money, inflation. Stop the loans, you get a little bit of disinflation. Right now, Wall Street banks point to resilient U.S. consumer as loan growth picks up. When loan growth picks up, inflation picks up, and the middle class continues to get wiped out. Is that good news? Well, it's good news if you're 1%. I'm teaching you how this whole thing works. All right, now let's go back to stonks and the government and back to loans. U.S. commercial banks report $254 billion surge in loans. It's the highest since 2020. I'm going to say this again. Since it was the lockdown, and then you had the V-shaped recovery because of loans, PPP loans, you name it. Loans galore. We're now up $254 billion in loans. Well, the problem is with banks, they're completely underwater, upside down, because they hold bonds. Those are called unrealized losses. So on the surface, it might sound good, but let's again put that aside as this is not hopeful. Okay, so now back to the banks and in the banks. And when the government and banks create money, the ones that benefit the most are the ones closest to it. Businesses, banks, we do well. But now the working class, and I'll get to Ray in a second, no do so well. It's that inflation thing in that diagram that I just showed you. Like, you're okay, you're keeping up. You're no longer keeping up. The people that receive paychecks don't keep up. The people that create paychecks for the people who receive paychecks do keep up. Jumping up and down on this channel, you cannot get a paycheck. Well, what's the other way? Click subscribe. I'll teach you the ways of the force. I will give you a brief example in under 30 seconds. Go. I bought 2 Four Seasons in Vegas. They both went up about $2.5 million on each property. They're currently being built. One of the properties for 6 and change, 6 point something million and change. It now just closed, one above me just closed for 9 point something and change. 6, 7, 8, 9. That's $3 million. I would love to take that money, sell it. Don't rent it. Just sell it. Take the $3 million. Here's the problem. Here's the system. You don't ever want to sell your assets. You want to live from your assets. I don't get it. Just watch. I sell it. I get capital gains, 37%. So if I make this many, we're gonna lose a finger, a third. What, really? You want me to give up a third? Then you could put the $2 million, but you have 3. Don't ever sell that. You say, hey, bank, if you really need the money, okay? Everyone's trying to get their digits really high in their accounts. Stop. If you really need the money, say, hey, Chase Bank, right? We're in Chase. Hey, can I have a loan? Look at my equity. Sure, you have equity. What do you need? $2 million. Great. Get SOFR? Fine. 4%, 3%, whatever this going SOFR is. Here's $2 million. Here's $3 million. If you have T-bills and you got $3 million in T-bills or $10 million, here's $10 million. So now back to what I was saying. Are you in the system? Are you getting a paycheck? Are you doing everything you can to get out of the system to not have to receive a paycheck and then to not keep up? Okay, so now what is Ray saying? A smart guy, billions. Ray Dalio, AI bubble. When it pops, are you ready? Yes, but there's a lot of money to be made now. Sure. And don't beat your head against the wall. Us as traders, if you are a trader, please learn. You're making money every day. You don't care. Hey, NVIDIA, I told you. If you watch this, you could have gone long on Cheesecake Factory. You would beat NVIDIA. So don't sweat it. Cheesecake Factory, what? I think it's up to... It's beating it. It's outperforming it about 100% or more, maybe 110. I don't know. I'm not going into the charts. but so many different stocks. I'm like, oh, look, that's a swing up. This you can swing trade. Swing it up. You could swing it down. You could be huge. You could be an elephant. Just swing it all around. The AI bubble. So it's coming. Okay. 2000 lesson. People always forget. I don't forget. Wealth is not the same as money. Wealth is not the same as money. That is why I come here. I actually, wealth, money, I just want you free from the system. I want you to get on the other side. I mean, what the rich do, and there are just so many of them are pathetic and it's wrong. I don't agree with it. I just want you to have enough digits and be able to click here, click there to go, my side hustle's doing good. This is doing good. Let's go to dinner. So you're kind of the 1%, but you're not like them. And the rich are building their 1%. They have their K-shaped economy, even though they will say there is no K-shaped economy. No, right. It's an I-shaped. It's the dot is the 1%, and everyone else is just basically going down to the basement, mom's basement. You have higher costs in everything. People that were owning and now renting, like you can't keep up because you have the job, you have weaker services, weaker public. Everything is just collapsing from underneath. But yet, oh my gosh, the Four Seasons, really, it's a different ball game. Okay, let's jump into how this is a completely different ball game and what are we going to do about it? Well, you're going to get at least to the 20%.
You mentioned the K-shaped economy. Explain that real quick.
Yeah, this K-shaped economy, I started using the term a year ago and it really caught on. And basically it's the notion that most of the spending in the economy is coming from the top 20% of earners. So these are people in America who are earning about $170,000 or more. And their reality is just totally different from everybody else in the bottom 80%. And so that's the K, the sort of diverging. Meanwhile, in the rest of America, people are kind of treading water. Yes, they're still spending, but they're spending more and more at discount and warehouse stores. They're really having to budget and economize, and they're feeling it. They're feeling a financial squeeze.
And that.
Okay, so let's look at this 170K. Well, then I'm going to add a plus there because you always have to make more. Right now, you should be at 170K. A year, your partner 170K. Then it is like 1970 all over again, and you're slightly above minimum wage. If you are not there, you need to have a game plan to get there. I am your daily alarm clock that says, hey, what's the stepping stone? Again, lots of fog. You only see the stone you're on. You got to move forward. But I don't know what is ahead of that fog. Yeah, I don't know either. All I know is you can't stay on the step you're currently on because it's disintegrating. You have to. You don't have a choice. You have to take a step forward. Well, okay, I'll trust you in faith. Thank you. It didn't work out the way I thought it would. I took that step and it's like I'm kind of still break even. Okay. We're going to take another one. Because I will do everything that I can in my being until I deceased to get you to the next step. So the renter generation, young Americans shut out from, it's not even home ownership. This is like shelter. College degree, go Notre Dame, Irish, can't even afford shelter, brace to rent forever. It is the system. It is the elites, and they have pushed this narrative on you since the lockdown. You will own nothing. You'll be happy. It's okay. You can rent your next iPhone. Watch. That's how it's going to be. That's the elites. You're going to rent your phones now. You're going to rent your shelter. You're going to everything. You're going to rent everything because you are their passive income. You are their 170K plus. And I rarely do this because I suck at reading. I am the worst. God for audiobooks. After graduating for the Notre Dame, you are at a whole nother level. You beat me. I mean, I have an AA, a BA, a master's, and almost finished a doctorate, but none of those big names. My degree's in underwater basket weaving, but moves, California, working, interest rates at the time, low. Buying a house felt like a realistic ambition. if she could just save enough. And I say you can't do it by saving. You see? It's like that treadmill and it starts speeding up. Or that money and it starts disappearing. Then she moves 7 times, Sacramento, a few times, roommates, renting, rat infestation. Again, probably a doctor paying rent, bills, can't save, modest salary. Each paycheck, at least half of it went to rent. And it just keeps going. Where the modest income is like, she has a few $100 to play with. Sometimes that would cause me to overdrawn. I wasn't expecting a bill. Oh, I know, right? Now she's like, home ownership, it's not even achievable. Then check out these numbers. The median age of renters is now 42 years old. The rest, they're living in mom's basement. You used to be 38, and 38 was like, okay, bottom of the barrel, you're renting. Now you're 42. You're like the elite. They're like, ooh, someday I hope I have enough money to rent. Now, what's the average age of someone who owns a home? Is it 60 or is it 70? Basically retire and then you can get a home. How about the college degrees? Higher, 22% in 2010, and 1/3. We have more. Everyone has a degree. You get a degree. I get a degree. And here's another one. This cat, he's almost 40 years old, married. His wife, look, married, wife, saving money. We're going to be able to have a down payment on a home. No, sorry, not anymore. See, back in the day, you could save money because it was money. Silver, it keeps up. It's not there's no treadmill here when you're actually using an asset as money. You're using debt. Now, the good news is this whole system is coming to an end. How long, though? I don't know. We're currently in the Besant is panicking, going from 4 billion to 1 trillion. Like, we'll print endless. Oh, hey, bond market, and this is Besant speaking, that I've made billions of dollars under Soros. He knows what he's doing, but he should know that it is not going to work. Nothing is going to work. The only thing that kind of will work is, again, 1 trillion. Then we will call it the day of reckoning. Moody's economist Mark warns for conditions. Yes, just know where the sell button is, which it's right here. It's the red one. You push sell. I'm not talking about like closing your position from silver where you entered long and then you closed it. I'm talking about like, okay, you entered it, you closed it, you made money. Set that aside. I'm talking about it comes up on silver. It's going to take a few whacks at it. Long term, I am bullish on silver. Just short it. Click the sell button. Make some digits on the way down. Maybe short it to the 20. That's it, though. I'm kind of curious. I asked if I shorted sell one contract of SI1 futures, how much would I make? One contract, I would walk away with $22,050 profit. That's if I get this right. Now you could do like I have up here, SLV. That's $64. Okay, walk away with a few bucks, right, and then have to pay capital gains. But it's that kind of knowledge that you would find in a course that you're like, oh, I didn't know that. Oh, I didn't know that. You know, when someone puts together between 50 to 100 videos, oh, that could be really helpful, and how to lever up. And then also silver. When this, again, I said this was a small move. Get ready for 92 or whatever. You are in a pattern. Do you understand this pattern? Do you understand the bull flag breakout? Do you understand where we are at, where we could go, where you're going to have resistance, all of this? So please be very careful when I say, hey, short it is just a whack-a-mole move. It's a B move. It's when people are like, well, I love silver. What do you want me? How do you can trade it this way? Again, I'm giving you warning, okay? If you don't know how to trade, do nothing. Big picture on silver, look, going all the way back. We're at 1991. That was first target, okay? 94, 97, 2006, 2012. Next target. That was 2012. Where we is at now, okay, going from 26 to 2030. All right, let's go. We're above it. We're retesting it. Silver could go, now I'm not saying a lot higher, but it could go a lot higher. Be this stuff right here. That's it. A quarter or same thing. When you are in a debt-based system, stuff breaks And they're like, we need to even go bigger. When they go bigger, your money goes bigger. Their solution is go bigger. Your solution is understand how this system works. If you don't understand it, grab the textbook here. I hate textbooks. Me doing videos and like, step 1, click here. Step 2, click there. Step 3, print money. Also, when you're going through this, I do videos Monday through Friday. It's going to pop up down here. I'll walk you through how today's trades went, if I made money, if I lost money, if I broke even. Because I am transparent. And with that, I love you, and grab that, and I'll see you tomorrow.